From home foreclosure freefall to home buyer feeding frenzy. Tonight on Arizona Week, real estate reality.
People are saying we need to get used to the market being this low and it'll stay low. I don't think that's going to happen. We're going to have something of a snapback. Given the very low supply we currently have, it's going to be a feeding frenzy for buying for quite some time.
Once again, your moderator, Michael Cheha.
The burst of the national housing bubble was more of an explosion in Arizona. Now, after 4 very difficult years, we're seeing nascent signs of recovery. 3 people close to the industry talked about it with me. First, Michael Orr, director of the Center for Real Estate Theory and Practice at Arizona State University. Is the worst over in the Arizona real estate market?
Well, to be honest, I can only talk about Greater Phoenix in any detail because I don't have all the data from the rest of Arizona. So
Phoenix being the monster in the market.
It's the monster, but not everywhere behaves the same as Phoenix. So I have a tremendous amount of data about Greater Phoenix, basically Maricopa and Pinal counties. But I wouldn't like to speculate about other counties because I'm a very detail-oriented person and I like to know that the facts back up anything I'm going to say. But to answer your question, in Greater Phoenix, the worst is definitely over. We've been through a pretty hellish time. The foreclosure crisis hit us harder than almost any other part of the U.S. Probably Las Vegas and perhaps parts of Florida had it just as bad. But the peak was really 2009, so we're now coming 3 years after that, and we're definitely on the downward slope. So things are, most the signals I look at are looking up, and there's really only just a few exceptions right now. The market is improving quite fast.
And what can that tell us about the rest of 2012? Will it continue to improve slowly?
Nobody really knows for sure what's going to happen. The current trend indicates that prices are going to rise because supply is still coming down and demand is strong, and the market principles always say that causes prices to rise. And what happens when prices rise is usually it attracts more supply into the market and we get balanced again. But right now, there's not much sign of any new supply coming on. Each week that goes by, we're actually seeing less and less homes available. So anybody who's in the market trying to buy is getting more frustrated and more desperate. And that tends to mean they'll bid higher prices against their competition.
Now, at the peak of the problem, we were seeing lots of foreclosures in Arizona and nationally.
Yes.
And the foreclosures have eased off a bit. RealtyTracs report out this week says that they're looking better in the Phoenix area and in Arizona in general. What are you seeing?
Well, I'm seeing a big reduction if you look year on year. There's always a lot of bumps in the foreclosure trends. 1 month may jump up from the month before, but then go down again the next month. So you shouldn't get too excited about 1 month data. I like to look at what happens in, say, February this year versus February last year. And we're about 45% down year on year. But February was higher than January. So if you want to find bad news, you can find it in the monthly numbers.
And what are the specific impacts in the market as a result of so many homes coming onto the market so quickly? Obviously lower prices, but other factors?
Well, it's displaced a lot of people who were homeowners who are now tenants. We've had a huge change in the whole makeup of the ownership of the Phoenix market. A lot of the housing stock is now in the hands of landlords who may own hundreds of homes and make good profits renting them out to people who can't buy homes because their credit has been destroyed. However, that credit is not destroyed forever. So the people who were foreclosed in 2007 and 8 are now coming out of the penalty box, if you like. If they have been able to rebuild their credit, they're now eligible for a loan and they can get back in the market. So there will be, I think, a counter trend starting where people start coming out of rentals and into owning their own homes again.
Now, prices did go down at the bottom of the market or at the peak of the problem, if you will.
Yes.
Your latest report says that they're starting to edge back up a little. Can you tell us what you're seeing there?
Yeah, prices overall came down about 58% on average from the peak to the bottom. and the lowest point I measured was around August, September last year. So we're now about half a year beyond that. Prices started inching up in October, but now they're starting to accelerate. And we're probably at a point where they're about 8 or 9% higher on a price per square foot basis than they were a year ago, which is a pretty healthy appreciation rate. Obviously, it's from a very low point, so we're nowhere near back to even what they were in 2000 or 2001. And we're still a long way from the long-term trend line. Back in 2000, the average home price in Greater Phoenix was about $100 per square foot. And by now, if nothing unusual had happened, they'd probably be about $120 a square foot. We got down to 78. So, we're 50%, we'd need a 50% increase from where we were at the bottom just to get back to the long-term trend line. That's how cheap we've got. And we've started to make that move. Now, how quickly we get back, I mean, most economists would say that eventually you'll get back to the long-term trend line, but it may take a decade, it may take just 12 months, who knows. Right now, the pace of price change has accelerated to a pretty strong degree, but that's partly because we're in the peak buying season. Spring is definitely when most people are out shopping for a new home.
Now, at the bottom of the market, investors come in and start buying up a lot.
Yep.
Are they backing off now that prices are going up, or what's the investor factor in the market?
The investors are always the first to come back in when prices drop to the point that they say, oh, well, that's, I can't turn that one down. I can make so much money. I don't care if it goes any lower. I'm going to buy these homes and turn them into rentals. I mean, and that's a good thing for the market because otherwise those homes will just get cheaper and cheaper and deteriorate. And the investors, generally, they will not just buy a home, but they will improve it to put it back in as a rental or to flip it to someone else. They really came in large numbers at the beginning of 2009. So that's when we first hit a bottom and sort of sliding along the bottom. We then had a bit of a recovery because of the government tax credit, which really appealed to first-time home buyers, and that drove prices up a little bit. But then as soon as that tax credit expired, it fell back down again. Investors have been buying throughout that period. And right now, we've got so many signals that the worst is over that more investors are coming in saying, well, now's a great time before they go up and they become no longer cost justified. They're not going to get the return as a landlord that they otherwise would.
Orr's research focuses on the Phoenix market, but he said what occurs in Phoenix often foreshadows the Tucson market by as much as 12 months. Now, more of my interview with Michael Orr. Arizona and specifically Phoenix have a number of different levels to the market,
oh, yeah.
Low-end, middle, high-end luxury homes, etc. Right. What was affected the most and what are you seeing about that right now?
Well, the bottom end of the market really was the areas that got hit the hardest with foreclosures. Higher percentage of homes went back to the banks, prices dropped the most. The very worst zip code in terms of that lost 85% of its value. That's just a staggering amount from peak to low point. The top end of the market had far fewer foreclosures and the prices did not come down as much, but they still came down by 40 to 45%, even in the most expensive areas. Right now, the recovery is coming from the bottom up, and it's the hardest hit areas that are bouncing back.
Now, we've been talking mostly about resale, but let's talk a little bit about new home construction. Are we starting to see activity there again?
It's still very low at the moment. Last year was the lowest year in terms of homes completed. Typically 300 or 400 a month only for an area as big as Phoenix. That's a really tiny number. But again, comparing months this year to the same month last year, I'm seeing a significant percentage increase. It's still low numbers, but the trend is definitely towards a growth in new home construction. And talking to builders, their plan is to ramp up to try and meet some of this demand and compensate for the shortage we've got in supply, particularly at the affordable end of the market.
Now, one thing that hasn't eased up is how hard it is to get a mortgage.
Right.
The standards have become much stricter over the last few years. What kind of an impact is that having in the Phoenix market?
It has had a significant impact. It's very difficult to compete against a cash buyer because it takes so long to get all of the paperwork completed, get all the approvals. I'm seeing just the first traces of it easing up a little bit. It's not that you don't have to get as much paper, but the qualification rules are just getting slightly easier. And the banks obviously don't feel quite as exposed. I mean, if you're putting 10% or 20% down on a house and the house price goes down, it's the homeowner that's going to lose first, not the bank. And so most of the banks are saying, well, I don't see the market going down by 20%, so we've really not got as much risk here. Nobody's doing the sort of 100% loans anymore, so it's generally a much more conservative climate. The biggest problem for people who are trying to get finance is you are dependent on an appraisal. And the sellers are concerned that even if they get a really good offer, that it won't appraise for that value, and therefore the offer will be back down to the appraised value, and they end up with less money than they thought. That doesn't tend to happen with a cash offer. So the sellers are saying, well, this cash offer is maybe 3% less, but it's firm. So I'm going to take that one, which is very problematic for the people who need finance. They find that they're in second place all the time.
Now, has everything that's happened in the last few years had any permanent effect on the housing market in the Phoenix area? Has it permanently changed, and if so, how is that?
You know, I don't have to know the future to know if it was permanent. I think there are lots of very significant changes, but whether they stay forever, I don't know. We've definitely got far fewer people who are owner-occupiers and a lot more renters. Some parts of the housing stock have been sort of really dramatically affected by the number of foreclosures, and that's affected desirability of certain areas. We've also had significant inflows of people from specific areas out of state. You know, it's been said many times, but Canadians have really latched on to Arizona real estate in the last 4 years in a way they never did before. And so we're seeing quite a significant number. In terms of dollars spent, about 6% of every dollar in real estate housing in Phoenix is spent by a Canadian, which is more than 10 times what it used to be. So we're starting to see some communities where the percentage of Canadians is actually above 20%.
Is there a new normal? I don't know that the early part of the last decade could be called normal because it was such a boom time.
Right.
But when will we get back to something approximating whatever normal might be?
I don't think anytime soon, actually. The last time I would call it close to normal would be 2001. And even then, it didn't feel quite normal because we had 9/11, and that caused some disruption. And particularly the luxury market was suffering for a little bit then. But I don't think last year is the new normal. People are saying we need to get used to the market being this low and it'll stay low. I don't think that's going to happen. We're going to have something of a snapback. And given the very low supply we currently have, it's going to be a feeding frenzy for buying for quite some time. What needs to happen is prices would rise then because of all the competition to a point where new sellers are attracted into the market. They can now get what they want for their home, and then we have a chance of stabilizing. That's still quite a way into the future because prices, I think, would have to rise quite a lot to get a significant number of new sellers in because so many people are already underwater, and it's going to take quite a rise in the tide of pricing for that to change.
Even with signs of recovery, foreclosures are still a threat in Arizona. Here to discuss it is Darren Bloomquist, Vice President of RealtyTrack based in Irvine, California. RealtyTrack follows foreclosures nationally and issues monthly reports on foreclosure activity. Mr. Bloomquist, welcome.
Thank you very much for having me, Michael.
Your February report was out this week. What did it say about Arizona foreclosures?
Well, there's good news and bad news with Arizona foreclosure activity. The good news, I guess I'll start with, is that we're seeing a continued downward trend in foreclosure activity in Arizona. We saw about a 40% year-over-year decrease in foreclosure activity in Arizona and in the Phoenix area. And this was a continuation of a trend we've been seeing for a long time. For the last year and a half. In Phoenix, 15 out of the last 16 months, we've seen decreasing foreclosure activity. And so the numbers are on their way down. However, the bad news is that despite these decreases, Arizona and Phoenix as well are still areas that are very hard hit by foreclosures. Arizona had the third highest state foreclosure rate in the nation in the month of February, and Phoenix as a metro area had the 14th highest metro foreclosure rate among metro areas with a population of 200,000 or more. So they're continuing to rank very high and with foreclosure rates that are well above the national average.
So what does that say for the rest of the year? Any forecast as to how it'll go in Arizona in the next 12 months?
You know, I think because of some of these issues that we've been facing in the rest of the country as well as Arizona over the last year, that started with what the so-called robo-signing controversy, where banks got into trouble with sloppy paperwork and documentation in foreclosing, I think we're going to see a little uptick in the numbers in Arizona and Phoenix this year over the next few months as the banks catch up on some of the delayed foreclosures that were caused by that controversy. However, I still think that the downward trend, or the long-term trend, is downward in Arizona and Phoenix. And in fact, I would say that Phoenix and Arizona in general are ahead of the curve when it comes to the rest of the nation in getting through this foreclosure problem. And so we're going to see a slight bump upward in the numbers as we catch up with some of those delayed foreclosures, but then we'll return to this downward trend that we've been seeing over the last year and a half.
So would you say that as far as Arizona is concerned, we've seen the worst of it when it comes to foreclosures, other than the paperwork and court legal blip that you just described?
Yes, I would. I would say we're past the worst of it. It's going to be a little bit of a bumpy ride on the way down, and it's definitely not to say that foreclosures are still affecting Arizona. There's still a very severe problem there, but at least we're seeing the right trajectory there in terms of foreclosures, and we have passed the peak. I would say the worst of it was probably in 2010 or late 2009.
Now, I want to ask you in a minute about the national numbers and about a couple of our neighbor states in the region. But first, let me ask you, what does RealtyTrack do with the numbers that it collects and distributes?
Sure. Yeah, our main business is actually our website, RealtyTrack.com, where we make the foreclosure data available to subscribers. So if you're interested in finding out not only about what's happening in general with foreclosure activity, but maybe even pursuing a specific foreclosure property to purchase, you can find those on RealtyTrack.com. So we collect each individual record with the address and the information about when the foreclosure auction is going to occur. And if it's a bank-owned property that's been repossessed by the bank, the information about the bank who owns the property. And that's where we post that information.
So you're actually helping to market some of these foreclosed homes across the nation, is that right?
Yes, I mean, we see ourselves as a marketplace for foreclosure properties. In the past, foreclosures were kind of the purview of just a select few really experienced real estate investors who knew where to go in the courts to find the documents about the foreclosure and knew about the public auctions that they could go to bid on the properties. We're trying to democratize that and have been over the past 10 years almost now, and making it available to anybody nationwide can come in and look for find foreclosures, even though often these foreclosures, especially the ones sold at the courthouse steps, are not yet listed for sale. So if you went to a real estate agent, you wouldn't find that property through them, on what's called the MLS, the multiple listing service.
Now, let me ask you about the national numbers. What did RealtyTrack find is going on nationally with foreclosures? You said that Arizona's a little ahead of the curve, so national must not look as good.
That's correct. So Arizona's down. The big decrease in February, which is a continuation of a trend. We have kind of a tale of two types of markets in the nation. There's a group of states like Arizona that are down, and that includes neighboring states of California and Nevada and some other states in the West, Washington. But then there's another whole group of states, 21 states, where we saw increases in foreclosure activity in February. And that all resulted in kind of a wash nationwide. We saw a 2% month-over-month decrease in foreclosure activity nationwide. and an 8% decrease year over year. But then it wasn't that every state was like that. There was kind of two extremes. There were states like Arizona, and then these other 21 states. Many of them were posting 20, 30, 40% year-over-year increases in foreclosure activity. And so the news is not quite so good in those states.
Now, we have just about 30 seconds remaining, and in that time, would you tell us about our neighbors, California and Nevada, who've also been very low in the rankings when it comes to this? Just their numbers, please.
Yes, California continues to have the most foreclosures of any state, but it, again, is also on that downward trend that we're seeing in Arizona. California had the nation's second highest foreclosure rate, and Nevada had the first highest foreclosure rate. So again, all these states have very high foreclosure rates, but both Nevada and California are also on that downward trajectory that we're seeing in Arizona.
Darren Bloomquist of Realty Track in Irvine, California, thanks so much for speaking with me.
You're welcome. Great to be here.
A ripple effect of the housing meltdown was what it did in the state's once booming construction industry, in which thousands lost their jobs. We're starting to see just a little positive movement now, and the president of the Southern Arizona Home Builders Association, David Godleski, spoke with me about it. Thanks so much for being here on Arizona Week.
Thank you for the opportunity to be here today.
What are we seeing in the way of new home building activity in the Tucson area?
Well, we've certainly gone through a difficult 3 or 4 year period of time, but we have started to see some positive signs that we're beginning to have a recovery and seeing increased construction activity.
Lost jobs from construction workers, suppliers, and all the way through the chain of the economy. What did it do for actual home builders? Has there been a shakeout there as well?
Absolutely. There's been a significant amount of job loss as we've been through this recession. It's hit builders particularly hard. We've seen a significant reduction in terms of organization size, the number of staff that are on board from the builders, close to 80-90% reduction from the peak. And so it's been a tremendous amount of job loss the past several years.
Your organization advocates for area builders. What was your membership at its peak, and what is it now?
When I joined the association in 2008, we had about 740 members or so. Right now, we're about 325 members. So it is a pretty significant drop, but we're holding our own.
And those who've survived have had to make their own changes just to stay in business. Can you talk a little bit about what you're seeing in that regard?
There's been a significant transition for the builders and how to stay in business in light of the economic conditions. We've seen builders who have gotten into remodeling. We've seen other builders adapt and get into tenant improvements, inspections. The one thing that I'm continually impressed by is how resilient the builders are and the ones who are adapting to survive. And I think it's a testament to their strength.
Have you seen a difference between how national building firms and locally owned firms are reacting to this?
There hasn't been a significant difference in terms of how national builders are dealing with the downturn compared to the local builders. They've all really had to adjust their overhead. The one difference, though, with the national builders, a number of them are now operated out of Phoenix. And so where they would have local division presidents, they're no longer here. We only have a couple local division presidents with national firms, but the local builders have been able to stay intact from a leadership standpoint.
One of the numbers that we all tend to watch very closely is building permits for new homes. What are you seeing in that regard now and for the rest of 2012? Is there optimism there?
There's optimism that 2012 will be a better year than 2011 and certainly 2010. We're not, it's more cautious optimism, but even in the first 2 months, January and February, have shown some positive signs and an increase in volume and activity. So we are cautiously optimistic it'll be better in 2012.
And you were saying that at its peak, Pima County was issuing about 16,000 residential building permits, and now we're seeing how many?
Well, right now we're seeing, we're hopeful that this year we'll have about 1,600 permits. That's up from about 1,400 last year. The peak was just under 12,000, so we're still a long way from the peak. I don't think we'll get back there anytime soon, but hopefully certainly see a significant amount of growth off of the 1,600 we're expecting in 2012.
And what does the new permanent home building market look like? Is it going to be different than what we've seen in the past?
I certainly think there will be changes in the types of products that you're going to see from the home builders. Definitely, there's a continued movement to smaller lot sizes, to smaller square footage in terms of the homes. But there will obviously always be a diverse consumer segment. There will be those who will want to live in the suburbs, those who will want to live closer into the urban areas. So I think things are different, but we're going to continue to see a lot of what we had seen previously.
Would you say that that homes in the lower price range were hit harder than homes in the luxury range in the crunch?
I think we've definitely seen the impact across all price points. Right now, we're seeing a lot of activity in the lower price ranges. That's where, especially on the resale side, it's on the lower end, and that as a result has forced builders to build at a lower price point. So we're seeing a lot of activity in that range currently.
And we know that in the resale market, prices have really been affected and, in fact, have been somewhat depressed and still haven't seemed to bottom out, or maybe have. We'll have to find out. But what's going on with new home pricing?
I think we have gotten to the bottom, or pretty darn close to it. It has had a significant impact on pricing for both resale and new construction. New construction, the median sales price has been hovering right around that $200,000 amount. For the average, or for the median resale price, that's about $125,000 number. So there is that difference, but we're hopeful that prices will hold for 2012 and continue to go up from that point.
And what would you say to the average person out there who's starting to look for a new home? Is this a good time for them to be out there looking, and what should they look for?
I think it's a great time to buy. We've seen all-time low interest rates, all-time high in terms of affordability. Obviously, the lending requirements have strengthened, but I would encourage anybody who's renting now to go out and look, consider a new home, but also there are great deals on the resale side as well.
David Godleski, president of the Southern Arizona Home Builders Association, thanks for speaking with me.
Thank you again.
You can see Michael Orr's full interview on our website, along with links to his research and to RealtyTrac's February report, all at azweek.com. That's our program for Friday, March 16th, 2012. Next week, we'll preview the U.S. Supreme Court arguments in the national health care debate and look at how health care issues are playing out in the state. For Arizona Week, I'm Michael Cheeha.